This is Bryce Norris, Senior Editor of Farm Futures Magazine, and welcome to The Buzz for Friday, January 11th, 2013. Today was USDA Report Day, one that farmers and traders have been waiting for it seems like pretty much forever. And today's numbers from the agency lived up to their expectations for providing plenty of surprises. Let's go over the data with Farm Futures market analyst Paul Bergener. We'll start with corn. The big number there was the agency's estimate of December 1st inventories. They came in at just 8.3 billion bushels, about 300 million less than the trade was looking for. That implies extremely strong first quarter feed usage and led to tightening of ending stocks. Ending stocks dropped to 602 million. They down 45 million. It didn't drop as much as that big feed usage because USDA also lowered its estimate of exports 200 million bushels, even more than I was looking for. Also raised its forecast of 2012 crop production up by about 55 million bushels. So all in all, the market got some bullish news and responded with some very strong gains, rallied up to 723 and 3/4 at one point, pulling back from that a little bit, but still enjoying some double-digit gains. So, Paul, what really impressed you about today's report?
Well, I think that feed number is the one that really jumps out at you. The feed use is up significantly, and I think the interesting thing is hog and pig numbers have stayed up, but we still haven't really put cattle on feed in the feedlots. So it'll be interesting to see how all of those numbers come together as we move more cattle into the feedlots into the spring. I think that's the big number that jumped out at me.
Yeah, certainly it looks like we'll probably try to feed a little more wheat, probably some soft red winter wheat. And wheat followed along with the corn market today, moving higher, both on that forecast for increased wheat feeding, but also on a lower than expected estimate of winter wheat seedings. USDA put winter wheat seedings at 41.82 million acres. Now that wasn't far from our estimate, but it was about 500,000 acres less than the trade was looking for. So coupled with the ongoing effects of the lingering drought on the plains, that's helping corn prices rally nicely. USDA put its estimate of 2012 wheat ending stocks here in the U.S., 716 million bushels. That was down 38 million, a little bit more than the trade was looking for. Again, due to that stronger feed usage number. USDA didn't change its forecast to exports at all. They've been slow lately, but have started to show signs of picking up again, really with that soft red winter wheat, which is competitively priced on world markets. Paul, do you think this has put a bottom in the wheat market and we can move higher now, at least into, let's say, March?
I kind of believe it has. I've been pretty bullish on wheat for a little while, believing that we're really going to struggle out here with some of the wheat in the hard red winter wheat areas in the plains with the weather that we've had and the poor conditions. So you shorten up the acres planted a little bit because the moisture wasn't there in the fall. And then if we come on out into the spring with continued poor condition, we could definitely see some strength in this wheat market. It's real likely that those numbers are even low as we look forward. So I think there is some strength in wheat.
Well, soybeans got the disappointing news today. USDA raised its forecast of 2012 crop production by 44 million bushels, a little more than the trade expected, and that led to an increase of 5 million bushels in ending stocks. Now, USDA didn't change its forecast for exports, so it stayed the same, 1.345 billion bushels. But the agency raised its forecast of domestic crush. That's after a very strong start in the first quarter of the marketing year. But that increase in ending stocks and really lack of any bullish news from the USDA report caused prices to see some follow-through selling. They were already weak overnight, particularly after yesterday's bearish reversal lower from chart resistance as the market made new lows shortly after the report came out at 11 o'clock today. Has been able to bounce back somewhat, but still flirting with double-digit losses. Paul, do you think this soybean market is over and done with, or are any hopes for a rebound now?
Well, typically this is where we get weakness into the soybean market is on out from here. But it'll be interesting to see whether or not these numbers really hold together. I think as we look forward, the crushes numbers are large. The export numbers remained large. Really, what was done there was a significant increase in the harvested acres, and so were we working with the numbers to make things finish out the way we wanted them to, or is there really that many beans out there? It'll be interesting to watch as we move forward, and I got some questions on the soybean part of the report.
Of course, another factor will be just whether or not the Chinese export demand is cut off completely as we move into February, as it shifts into South American originations. If China is buying more than 10 million bushels a week, it will be a sign that demand is greater than expected. One of the reasons for softness today in beans was also due to an increased estimate of inflation in China. That hurt a whole range of commodities on ideas the Chinese government will begin tightening credit, and to slow down that inflation also would slow down imports of commodities into their economy. So market definitely watching that. Well, all in all, Paul, what do you think farmers need to be doing now? A lot of people were holding off on sales until these reports, also perhaps for tax purposes. What should farmers be thinking about now?
Well, I do think that there's going to be some opportunities, definitely in the feeds, in the corn and in the wheat, to start taking a look at some opportunities for some rallies and take a look at some sales there. I'm still kind of waiting on the 2013 crop for corn and soybeans until we see what those numbers look like coming off of the crop insurance price setting time in through February. So, if I've got old crop, I'm looking for some rallies. It was nice to see some movement there in corn and some in wheat. So those are there. I still think there's some strength left in soybeans. We'll see where that one goes.
Yeah, I think people need to be taking a close look at their bottom line to make sure they can withstand a downturn in soybean prices, particularly. Although that market's gotten beaten up pretty badly lately and seems like it's due for at least a little bounce. With beans, you can never tell when the funds start selling. Things can go south in a hurry. Well, thanks, Paul. We'll be back next week with another edition of The Buzz to see how the report fallout has played out.